All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Wednesday, everybody, and happy Inflation Day, everybody. Today's January 15th, 2025. And of course, the top story this morning is the Consumer Price Index, CPI, our inflation print. It just came out. Inflation went up last month, and the market loves it. No, really, that's the story. Higher inflation, and the market loves it. Now, you may be saying, Jack, WTF, that doesn't make any sense. I agree until you get down into the nuance of the CPI and you take all this stuff that's bad and all this stuff you don't like and all this stuff that's bad news and you crumple it up and you throw it right the hell away. And then you zero in on that one data point. That's good. That's an excuse to buy stocks. And then that's all you talk about and that's all you look at. And then magically, the market goes higher. So what am I talking about? I'm talking about core inflation. Core inflation, it crept down. And when I say it crept down, I mean an beansy, tiny little bit of a drop in core inflation. And, for you guys who are newer to the channel, newer to this stuff, core inflation strips out food and energy, which are considered volatile, and it measures the inflation rate of non-food, non-energy items. And, well, that did come down slightly this month. And so the market just loves it. And I mean, the market is ripping up in a straight line across the board. Stocks are higher this morning. Asset prices are higher. Now, let's just do some of the numbers real quick. CPI, 2.9% year over year. I would add that is still almost 50% higher than the Fed's arbitrary 50% target for inflation. So 2% target. Has anybody seen that 2% target? They're hiding under my desk here. It's got to be around here somewhere. The Fed sure as shit hasn't hit it in 4 years? Keep up the bad work. 2.9% year over year. That's largely what the market was expecting, and that is up from 2.7% last month. So the inflation print was higher. All right, for anybody who's out there and the headline says inflation drops, not what happened. Inflation went up. The headline number went up. On a month-over-month basis, it was actually a miss, 0.4% month over month. That is higher than the 0.3% the market was expecting and up from 0.3% last month. So far, we've got two inflation readings that are at least in line or higher than expectations and higher than they were a month ago. And again, the headline is like inflation vanquished, victory is ours, mission accomplished, all that crap. Now, when you get into the core numbers is what the market is focusing on this morning. 3.2% year over year. That is versus 3.3% expected. So that is a beat low in core inflation. As long as you throw out food and energy because they don't say what you want them to say, it's a beat. Now, that was also down ever so slightly from 3.3. Now, there's a chart that Nick Timoreos from the Wall Street Journal put out this morning that goes a little bit deeper on that drop from 3.3 to 3.2. It's not what you think it is. On a month-over-month basis, it was also a beat, 0.2% month-over-month for core inflation versus 0.3 expected, and down ever so slightly from 0.3 last month. So the market is really zeroing in on that core inflation print. Now, within that, you got a couple of highlights. The energy index was almost 40% of the increase in the consumer price index this month. Oil and gas and fuel oil and diesel, they are all creeping higher. Watch that energy market, guys. We've seen oil prices move higher by between $6 and $10 over the last month or so. These new sanctions on the Russian shadow fleet have caused Indian and Chinese buyers back into the global market instead of buying the Russian crude at a discount. That's putting some upward pressure on global oil prices. Now, the market is being very dismissive of that, saying, that's a one-off. It's not going to drive things any further. Maybe that's true, maybe not. But as of right now, between the cold driving up natural gas prices and what's going on in the oil markets, the energy index is driving a lot of inflation here, and it is more than offsetting the drop in core inflation. Again, the headline number still rose, so energy is getting worse faster than core is getting better. The market is very quick to dismiss that data point. I'm not so sure that's the right move here. Also within that, we had food got a little bit cheaper last month. Energy got a lot more expensive. New and used vehicles, positive numbers again. So cars are going up in price after falling sharply for most of 2024. That's something to keep an eye on. Shelter remains stubbornly high at 0.3. The shelter index is coming down, but man, is it taking its sweet time. And on top of that, you also had transport services got a little more expensive. That's your vehicle insurance and your airfares on the rise. I mean, look, the market is saying this is a great report, and the market is ripping on this news. The core number is encouraging. It is. And the energy, maybe it is just a geopolitical one-off, but we're still at 2.9%, way higher than that 2% target. And remember, inflation, guys, is a rate of change. All right. Inflation coming down means prices are still going up. They're just going up slower. And we're talking core inflation is coming down because energy is still going up. The overall index is still going up. And a lot of people spend a lot of their money on energy, especially the poor people. So life for the average person still getting harder because of inflation. Be careful, Wall Street. You're out there celebrating. I'm not so sure this is a number you really want to celebrate. Now, something that is worth celebrating this morning is what happened in the banks. The big bank earnings came out. We had earnings from JP Morgan, Wells Fargo, Goldman Sachs, Citigroup. Let's throw in BlackRock while we're at it. BlackRock's not a bank, but we'll put them in that category. Pretty much beats across the board. Higher earnings per share, higher revenue, a lot of investment banking, a lot of trading revenue. This stock market bubble is very good for the banks. They're all moving higher this morning. That's contributing to this move higher in stocks. The market, my moderator Mish had mentioned, I think we were up like 250 points in the Dow before that CPI came out. So at least some of this move could be explained by that core inflation print, but not all of it. The banks are contributing here. We also got 30-year mortgage data this morning. The 30-year mortgage rate last week for the week ending January 10th, it increased to 7.09%. That's another 10 basis points higher for the 30-year mortgage. Now, we'll see what that looks like at the end of the day today because interest rates are dropping right now as people digest this lower than expected inflation print. But mortgages above 7%, guys, that is getting more expensive. And miraculously, we got a surge in mortgage applications despite those higher mortgage rates to the tune of 33.3%, a big jump in mortgage applications. Now, within that, you got to keep in mind that's the week ended January 10th. That's the first full week since the holidays. Nobody takes out a mortgage during Christmas Eve. Nobody takes out a mortgage on New Year's Eve. So there may be some holiday, we'll say, gyrations going on there that are affecting that mortgage application surge all of a sudden. So let's wait another week or two before we freak out over that data. Let things stabilize post-holiday break here. But higher mortgage rates, guys, that's big. A 43.5% surge in refinances. Who is refinancing into a 7.09% mortgage right now? Well, people who are up to their eyeballs in credit card debt is who would do that. People using their homes as ATMs to pay off high-interest consumer credit. That is not a sign of economic health, guys. That's one to keep an eye on. And we got some interesting news this morning. Elon Musk is under investigation or being sued. It's a civil case being sued by the SEC for late disclosures surrounding his acquisition of Twitter. The SEC is saying Elon waited too long to let everybody know that he had amassed a stake in Twitter shares. And because of that, he bought Twitter shares at an artificial discount. And, well, the SEC is going after him. And I'm sure that has nothing to do with politics and that the SEC is totally done prosecuting all the other crime in finance, right? Because there's definitely no finance crime going on elsewhere. And this is just a straight up standard, run-of-the-mill thing. Well, look, Elon Musk, no stranger to trouble with the SEC. Elon and the SEC have not been simpatico for many moons, guys. You may recall his trouble with the commission goes way back before he endorsed the Donald, way back before the Twitter fiasco. For pretty much the last 15 years, Elon has been in trouble to one extent or another with the SEC. So I guess this really isn't that big a news when you think about it in that context. On top of that, we got some news out of South Korea this morning. Well, first of all, the South Korean president, Yoon Suk-yeol, finally in handcuffs. They finally arrested him. Sic semper tyrannis. Remember the guy who tried a coup in one of the world's largest economies? Yeah, that guy. And then somehow he managed to stay in power for a little while before they impeached him. They tried to arrest him. His security wouldn't let it happen. They finally arrested him last night. So looks like he's going to spend at least some time in custody. I don't know if he's going to go to jail. Hopefully he does. They should make an example out of him. On top of that, we got some unemployment data from South Korea. The South Korean job market did not like that little attempted coup, that declaration of martial law last month. unemployment in South Korea rose from 2.7% to 3.7%, a 1% increase in a month of unemployment in South Korea. Were they lying about it? And now that we got this new prime minister, president, whatever over there, now all of a sudden we're telling the truth about the jobs market? Or did a lot of people really lose their jobs after that martial law declaration? I don't know, but a big surge in unemployment in South Korea, that's worth keeping an eye on. Guys, we got a lot to talk about this morning. Let's shrink my big melon of a head. We're going to go fast today, everybody, because I don't want to miss anything, and there is a lot of news here. S&P 500 up 82 points, 1.4% higher ahead of the opening bell. Almost all of it came right after that big jump in, that big CPI report. Again, it was an increase in CPI, but a decrease in core. Market's overreacting, guys. But loving it this morning. The Dow up 643 points. About 450 of those came after the CPI report. Again, all of it right there. Now, the Dow was already up a little bit on big bank earnings. Bank earnings were pretty good. That's contributing to this move. And the NASDAQ is ripping higher as well, 1.64% higher, 342 points in the green this morning. All of that coming after CPI was released. We also have a sharply weaker DXY this morning. The market is starting to reset expectations, maybe a little bit of Fed dovishness. I mean, is the Fed really going to cut because inflation went up? Well, that's what the market is suggesting here. The DXY, 108.72, down 46 basis points. Weaker dollar means less aggressive Fed. And you can see it in the bond market this morning, too. Yields are way down. The 30-year Treasury, 4.885. That's down 10 basis points. The 10-year, 4.674. That's down 11 points and change. The 2 years at 4.276. That's down almost 9 points. And the 1 month is at 4.304. Even that one is down a little more than half a point. So interest rates are heading lower. Yields heading lower. That's bond prices heading higher. People are buying bonds on this news, guys. Look, I mean, the market is resetting expectations here. I don't know if they're saying, okay, now we're going to have 2 cuts in 2025 versus 1. A January cut is still off the table. But this is Fed doves is what's going on here. I mean, inflation going from 2.7 to 2.9%. Does that mean another rate cut? That doesn't really make sense to me. Core inflation dropping by 1/10 of a point, still being more than 50% above the Fed's target. Does that mean we get an extra rate cut this year? Apparently so. In lieu of catastrophic news, this market just grinds higher and we print more money and lower rates. That seems to be the way of things here. Commodities are seeing the same thing. Look at gold, 2,688. That's up by about $11 this morning, 0.5% higher for gold. Spot silver back above $30 at $30.23. That is 34 cents higher or 1.1% to the upside. I like the shiny. Copper is up 0.5%. Platinum is up 0.2%. Palladium is up 2.7%. And WTI is up another 1.1% this morning, almost 90 cents higher for March WTI futures at 77.24. Watch that energy market, guys. Energy is a big driver here. Even natural gas at $4.08 for February natural gas futures. That's up 11 cents, almost 2.9% higher. Energy played a big role in this inflation report. And we have got Bitcoin is sharply higher this morning as well. Again, a less aggressive Fed is very good for risk assets here. Bitcoin is moving higher, $2,350 higher as priced on Coinbase, trading at 98,918. Are we going to make a run at 100,000 again today? I don't know, but worth pointing out that we have recaptured the 50-day moving average. That's something we struggled with yesterday, back above that here on this inflation print. Now let's look at some of the numbers here. This is your headline CPI, guys. Does this look like a chart of inflation falling to anybody? I mean, well, look, it's lower than it was a year ago, if you want to be optimistic about it. But hey, September, October, November, December, it sure looks like this chart has done nothing but go higher since the Fed started cutting rates. It's almost like those two things might be related to each other. And now that it's gone higher again, everybody's like, good, maybe the Fed's going to cut even more. Are you guys seeing the same data I'm seeing? I don't know. I mean, me and Mish were looking at this one this morning, kind of like shaking our heads. We're like, what? I mean, yeah, I guess if you squint your eyes and you look really closely, you can make this look optimistic. But, inflation heading higher, guys. And again, to the average person, To the average guy that lives on Main Street, does he care if his life is getting more expensive because of gasoline or because of blenders? Does he care if it's core or if it's energy, or does he just care that his cost of living went up more than his wages? Well, apparently Wall Street cares. Looking at the month over month, again, does this look like a chart that is falling to anybody? Month over month, headline inflation 0.4 versus the 0.3 we got last month. That sure looks like inflation going higher. Yes, Midnight, I know inflation did go up and the market likes it. It makes no sense. My cat just came in here and started meowing. He's probably going to attack my feet, but we must press on. This is a live show. There are no do-overs. Looking over at core inflation, Midnight, that tickles. Core inflation, 3.2% year over year. Okay, now we're starting to get into some of the more optimistic. This is what the market sees, all right? This does look like a chart of inflation coming down, doesn't it? Now, also note the x-axis. This was 3.9% a year ago. Now it's 3.2%. Guys, we still have a long way to go to get to that 2% that the Fed tells us is their target. That doesn't really make sense, even though now they're like, oh, they're going to cut more. Well, they've been cutting since September, and we're still way above this target. On a month-over-month basis, again, this is partially what the market is celebrating here, that 0.2% reading versus that 0.3% in November. A little bit lower than expected, ever so slightly, and the market just loves it. Now, Nick Timiraos at the Wall Street Journal, he put out this one this morning, this chart of the Consumer Price Index. In black is your headline number. That includes food and energy. And then in light blue, that's showing your core number. That's the number that everybody loves here. Now, what I want to do is I want to just zoom in a little bit and show you guys, here's your latest data point. The light blue, you see that little tick down in core inflation? That's why stocks are ripping higher this morning. That little drop in the light blue line there, if you look real close, let's zoom way TF in. There you go. You see it. It's down. That's worth, 650 points in the Dow? Are you kidding me? Also, that also requires you to totally ignore this much larger increase in the headline number that's happening right below that one. And I would also point out, guys, note the rounding here. Look at the number. 3.24% was that core inflation print. We were 0.01% from 3.25, at which point this number would have rounded up to 3.3, and we would have been in line with what the market was expecting. This beat in core inflation was 1/100%. All right. If you think that's worth 650 points, good luck to you. All right. Something tells me this rally is going to be short-lived. Call it a hunch. Looking at some of this stuff here, the all items index, this is showing you the 2.9% headline number for the month ending in December. That was 0.4%. The food index, let's look at some of these month-over-month numbers here. Food inflation actually went down a little bit from 0.4 to 0.3. That was led by food at home, which, again, the number going down, if it's still a positive number, I get this in the comments a lot. If the number is still positive, above zero, it means prices are rising. If the number is going down, it means prices are rising slower. All right, that's an important distinction. I get this comment every time. All right, so food away from home went down. It didn't get cheaper. It got more expensive, but it got more expensive slower than it did the month before that. All right, so it was pretty much restaurants that drove the food index heading lower. Now, look at the energy index. This is pretty important here. First thing I want to point out, the energy index was still negative year over year. All right, energy has been a drag on CPI for pretty much the last year. But if you'll notice, about 3 months ago, that started to change from September when we were deeply negative. Then we were flat in October. Now, 2 months in a row, we've had positive numbers in the energy index. And look at how rapidly those numbers are rising now. 2.6% month over month for energy inflation. Energy is going up, and it's going up fast. It's still negative versus a year ago, but that is hiding a very sharp, sudden increase. That's being driven by energy commodities, which went from 0.5% to 4.3%. Gasoline went from 0.6 to 4.4% month over month. We've also got things like fuel oil, 0.6 to 4.4. Natural gas is getting more expensive. Energy is driving the overall index higher here. And the increase in energy is more than the decrease in core. That's why the headline number is still going higher. Some other things to point out here that jumped out at me. New vehicles. We've now got 2 months in a row of positive numbers for new vehicles. Even though the sales figures for most of the automakers have been abysmal for the last year or so, the prices are going up again. 0.5% versus 0.6. They went up a little slower than they did last month, but virtually the same rate. And I would also point out that that number has been negative for about the last year. That's about to swing to a positive again. Used cars and trucks also got more expensive. That's 3 consecutive months of at least a whole percent increase in the price of a used car, 1.2% versus 2.0% last month. So it went up a little slower, but used cars and trucks, new vehicles, autos are starting to push these numbers higher. We've got apparel was pretty much flat. Let's see, the shelter index, 3 consecutive months at 0.3%. That has not changed. Everybody's expecting shelter to start getting cheaper on these CPI prints, and it just won't happen. So shelter, still a big contributor here. The last one that jumped out at me was transportation services went from 0.0 to 0.5. That is mostly your airfares and your auto insurance, along with auto repairs getting more expensive there. So that's the inflation print. I mean, people really like this, guys. It's sending stocks higher. Let's talk about some other news going on here. Musk accused by the SEC of cheating Twitter investors out of millions. Elon Musk is having more problems with the SEC. Elon Musk cheated Twitter shareholders out of more than $150 million by waiting too long to disclose his growing stake in the company as he prepared a takeover bid, the U.S. Securities and Exchange Commission claimed in a lawsuit filed days before the Trump administration takes over. Ignore that last part. I'm sure the whole days before Trump takes over, I'm sure that's totally immaterial to this case. Wink, wink, hint, hint. The agency's complaint, which was immediately disputed by a lawyer for Musk, accuses the billionaire of failing to promptly report that he had amassed a more than 5% of the social media platform stock in early 2022, a revelation that would have sent the stock's price higher. All I'll say, guys, is slow disclosures. Go back and look at the history of slow and inadequate disclosures. And what is the prosecution rate for that? Yeah. Look, was he slow to disclose it? I don't know. And if he was, yeah, he broke the law. All I'm saying is, how about we prosecute everybody that does that? Are we really going to start doing that? Let's prosecute everybody. Just throw that out there. Also going on this morning, South Korean President Yoon arrested over martial law fiasco. Good. Finally, I can't believe this guy wasn't in handcuffs a day later. It took a few months, but they finally arrested him. President Yoon Suk-yeol faces his first night in detention following his arrest by investigators looking to question the impeached leader over his short-lived martial law declaration. Investigators from the Corruption Investigation Office for High-Ranking Officials took Yoon into custody in an operation that started before dawn after the president repeatedly defied summons to appear for questioning. CIO investigators abandoned their first attempt to detain him on January 3rd after a nearly 6-hour standoff due to resistance from Yoon's security team. Wednesday's arrest makes Yoon the first incumbent president in the country's history to be taken into custody. He will likely be taken to a detention center in Uiwang, did I say that right, near Seoul, Wednesday evening, a facility that has previously housed impeached former President Park Geun-hye and Samsung Group scion J.Y. Lee. So, sic semper tyrannis, good riddance. This guy belongs in handcuffs. And coincidentally, South Korea's jobless rate jumps as political row hits the economy. 3.7% unemployment. Look, that was a big jump here. South Korea's unemployment rate rose to the highest level in more than 3 years as the number of jobs dropped, offering further evidence of an economy shaken by a martial law row and a deadly airline crash. The seasonally adjusted jobless rate jumped to 3.7% in December from 2.7% in the previous month, hitting the highest point since June of 2021, according to data released by the National Statistics Office on Wednesday. South Korea lost 52,000 jobs compared with a year earlier, in the first contraction since February. So, big jump in unemployment in South Korea. The president in handcuffs. Pay attention, guys. South Korea, I believe, is the world's 8th largest economy. Al Midnight, that hurts. A lot of things happening in South Korea. Let's look at the mortgage market. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances in the U.S. rose to 7.09% in the week ended January 10th. That is up 10 basis points from 6.99% in the previous week. That's according to the Mortgage Bankers Association. Mortgage rates extended the rise to hit the highest since early May, tracking gains in Treasury yields. Bond yields in the U.S. and abroad continued to move higher in response to concerns over a sticky inflation outlook and still too high budget deficits, which pushed mortgage rates higher for the fifth consecutive week. I would add, guys, that the news this morning sending yields lower, probably going to be a drag on this chart next week, but back above 7%. Look, here's where the Fed starts cutting in September when interest rates were 6.13. Now here we are almost 100 basis points higher for mortgage rates since the Fed started cutting. If you guys think the Fed is going to ride to the rescue of this housing market, you got another thing coming. That's all I'll say to that. Also, mortgage applications in the U.S. surged by 33.3% from the previous week in the period ending January 10th, erasing the decline in application volumes from the 4 prior weeks to record the sharpest increase in weekly applications since 2020. Again, this is Mortgage Bankers Association data. The holidays are going to play a role here. I don't know how much of this is holiday related, but the surge took place despite benchmark mortgage rates surpassing the 7% threshold, which tracked the jump in long-range Treasury yields as home buyers attempt to lock in borrowing ahead of fears that interest rates will rise even further. So a little bit of FOMO in the mortgage market. Who had that on their 2020s bingo? Applications to refinance a mortgage were more sensitive to short-term changes in interest rates. Those surged 43.5% from the earlier week. In the meantime, applications for a loan to purchase a home rose by 26.9%. Big jump in mortgage rates, big jump in mortgage demand. Let's wait until next week before we freak out over these numbers. That being said, if we see numbers like this next week also, I'm probably going to freak out over that because those numbers way, way too high for these mortgage rates. If you're refinancing your home right now, you done messed up, Ron. I can tell you that. All right, let's talk a little bit about some of these big bank earnings, guys. We're going to blow through this because we're getting a little bit long here. JP Morgan Chase tops estimates on better than expected interest income and Wall Street results. Earnings per share were $4.81 versus $4.11 expected. Those were up 50% year over year. Revenue of $43.74 billion versus $41.73 expected. That was up 10% year over year. JPM having a pretty good morning here. The stock is up 1.5% ahead of the open, trading at $251.30. Wells Fargo shares also jump after earnings beat and strong 2025 guidance. Earnings per share at Wells Fargo, $1.42 versus $1.35 expected, up 47% year over year. Another big increase in earnings per share here, guys. Revenue, $20.38 billion versus $20.59 billion. A slight miss in revenue for Wells Fargo. That's the only bad data point that I have found in all of these bank earnings that we got today was that slight miss in revenue for Wells Fargo. Wells Fargo shareholders, apparently they missed the revenue miss because that stock is up 5.5%, 6.5%. It's pretty volatile right now. $75.80 here, $4.30 higher for Wells Fargo shares. We also got Goldman Sachs tops estimates on strong trading results. Stock bubble is driving Goldman higher this morning. Earnings per share of $11.95 versus $8.22 expected. A huge beat on earnings per share for Goldman. That virtually doubled from a year ago. Stock market bubble, very good for Goldman Sachs. Revenue of $13.87 billion. That beat expectations of $12.39 billion, up 23% year over year. Another big bank beat here. Goldman stock, let's see, the opening bell just rang, 4.6% higher here. What's going on? Let me refresh this a little bit. What's going on with Goldman? We got a little volatility. All right, it was saying 4.6%. There it is, 4.5% higher, $597.25 for Goldman Sachs. We also got Citigroup's earnings are out. Here are the numbers. It was a beat for Citigroup as well. EPS of $1.34 versus $1.22 expected. Revenue of $19.58 billion versus $19.49 billion. So a beat on the top and the bottom for Citigroup as well. That stock is up. I got to refresh the chart again. Let's see. What do we have for Citigroup here? I got a lot of windows open this morning, guys. Citigroup stock is up 4.5% here. 4%, $76.40 for Citigroup. Last but not least, BlackRock. Big one from BlackRock this morning. BlackRock assets hit $11.6 trillion with a T. There was an obscure data point. I forget what it was. I closed it out because I was so packed this morning. But BlackRock's assets under management now exceeds the combined market cap of the entire stock market of something like England, France, Australia, and the UK combined. I mean, it was like 5 countries, all of which are like G8 countries combined. BlackRock now manages more assets than the whole freaking countries combined. It is ridiculously big for BlackRock. Assets under management of 11.55 trillion. That's up from 10.01 trillion a year ago. Some of that being driven by new investor cash, but most of that being driven by this asset bubble. Everything is going up, and so BlackRock's AUM goes up. Also, BlackRock's net income, $10.63 a share. That's 16% year over year higher. I don't have a quote for BlackRock up here. Let's see. BLK, ticker. I got too many windows open. We're getting slow here. All right, BlackRock, 4.86% higher, trading at $1,000 here, up about $45. So look, guys, big bank earnings, they were good across the board here, contributing to this big run in stocks this morning. But I think most of this run is being driven by a little bit of excessive enthusiasm or irrational exuberance surrounding that minuscule drop in core inflation. Again, guys, we were 0.1% away from rounding up and then coming in roughly in line with core inflation. But the market grabbed onto that, and boy, howdy, did it run with it. Stocks are ripping higher on this news. I just want to say thank you very much, Mr. Evan Francis, who says one last pump into the BOJ rate hike next Thursday, followed by a Fed pause. Evan, I don't know about that BOJ hike next Thursday. They've been very wishy-washy on that language. There's a chance they do it. I haven't looked at what the odds are. Let's say they're 50-50 right now. But the odds were 50-50 in December. And then they pushed it out to January. And now January is approaching. And now they're like, maybe January, maybe March. So I don't know what the BOJ is going to do. The BOJ has done a whole lot of nothing. I mean, it's been, almost 2 years now since Ueda took over at the Bank of Japan. Has it been 2 years, or was it last March he took over? I think it's been 2 years now. And he's taken his sweet time. We've had 2 itty-bitty little rate hikes from the BOJ. I think 25 basis points combined is what those rate hikes have amounted to. It was 10 and then 15 basis points. And the market freaked out in August over the sudden strengthening of the yen. So I think the Bank of Japan is afraid to hike here. Maybe they do, maybe they don't, but they're definitely afraid to do it. I do believe you that we'll see a Fed pause. I mean, that's virtually guaranteed at this point. Even this, I can't say this lower inflation print because it was higher. We'll say this, what do you call this inflation print? I don't know what you call it, but even this inflation print is not going to be enough to get them to cut in January. I think they definitely do pause. The ultimate blindside since Order 66 by Sith Lord Powell. Darth Fedius, is that what we're going to call him? I like that, Jay Powell, the Dark Lord of the Sith there. Look, the whole point here, I do agree with the spirit, Evan, of this comment here, that it's all about central banks. That's why the market is reacting positively to this inflation print, which is not good news for the average person, and therefore not good news for consumer spending, not good news for delinquencies. And by the way, speaking of delinquencies, in every single one of those articles about bank earnings this morning, I could not find one line about credit loss provisions anywhere. Nobody's talking about it. Why? Worth looking into. I didn't have time to find anything this morning, but maybe we need to look into that one. BOJ remains a big question mark, though, Evan. That is a very well thought out, well nuanced comment. And I agree, the Fed and the BOJ, probably the 2 most important bodies in the world right now. Let's throw the PBOC in that one while we're at it as well, because the PBOC over in China and their fire hose of liquidity, that's another big factor in global markets here. Thank you, sir, for supporting the channel. And thank you to the beekeeper. He says CPI at or close to inflection point higher. The CPI was higher, beekeeper. I mean, look, guys, we went from 2.7 to 2.9. We're almost back to a 3 handle on CPI. And everybody's like, this is great. Are you sure? Are you sure? Again, that rounding error on core taking us from from 3.3 down to 3.2. I mean, I got to bring this back up. This chart is so powerful that Nick Timoreo's put up, and it really does. It should take the wind out of the sails of this. Look at this little bitty drop in core inflation here. That is why stocks are ripping higher right now. And again, 1/100th of a basis point or 1/100th of a percent away from being in line with expectations. it's hard for me to get so excited about something like that. I agree. At or close to the inflection point. Hey, man, again, the takeaway here is absent catastrophic news, everything goes up. That is the takeaway. Why? Because the money supply is still expanding. We still have inflation. We still have more money than we had a month ago, a year ago, and asset prices go higher when that happens. Thank you very much, Beekeeper. Appreciate you being a Melonhead member for 7 months. And thank you so much to Metal Seer for being a Melonhead for 5 months. He says, part of my morning regimen. Well, Metal Seer, it is my honor and my privilege to be a part of your morning regimen. Thank you, sir, so much for having your coffee with the Melonheads. I appreciate the good vibes this morning. And thank you, everybody else who has me in your morning regimen. Thank you so much, guys. I appreciate your time. I shall strive to make it worthwhile for you. Thank you so much for the super chats and the support of the channel, everybody, as well as my magnanimous Melonheads on Patreon and YouTube for everything you guys do for the channel. You guys rock. Links down below in the description should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, don't forget that like button on the way out and that subscribe button if you're new here. I'll see you tomorrow. Till next time, live small and dream big.